Good morning everyone and welcome back to Morning Markets. Today we're going to be covering strong equity market performance in the US and Japan in particular, but also covering a speech by Bank of England Governor Andrew Bailey on inflation. So it's encouraging to see strong equity market performance in the US. This largely reflects improved mood music on discussions around the US debt ceiling. Recall the information we gave you last week. What looks likely to happen here is that President Biden is likely to cede to Republican demands for some spending cuts in the future to allow the Republicans to pass a bill through Congress which will raise the debt ceiling sometime around mid-June. So far the discussions seem to be progressing well and are likely to continue through the rest of this month. We're also seeing strong market performance in Japan, reflects a number of issues there. Earnings momentum is very encouraging. Expectations for earnings this year are being revised higher, and expectations for earnings next year remain higher than they are this year. So that's very encouraging on a momentum basis. There's also other benefits for Japan. They're benefiting from this idea of deglobalization, which is supply chains moving away from places like China. Industrialized economies like Japan are benefiting from that. And Japan's also lagging the global cycle, given their exit from COVID was more delayed than the US. So that's encouraging for Japanese equities there. Now let's cover a speech by Andrew Bailey briefly with regards to UK inflation. Yesterday he gave rise to this idea of second round of effects in the UK wage market. That is that high inflation is forcing UK wages higher. This doesn't really stand up to scrutiny, thankfully. UK inflation peaked in October last year. Now I know it doesn't feel like it, but price pressures in the UK are declining and they're likely to accelerate from this month onwards. And also UK wages have actually been broadly flat for the last 5 months. And the gap between wages and inflation is actually positive, which means unfortunately UK workers are enduring quite severe real pay cuts. So not quite sure why Governor Bailey chose this moment to give a speech on price setting pressures when inflation is likely to fall rapidly into the future. However, we're also likely to see food prices decline quite quickly in UK supermarkets, at least we should, given wholesale price pressures are now downwards in places like for oats, wheat, milk, eggs. These all feed into consumer staples, obviously. And given how competitive the UK supermarket industry is, it's likely that beyond the summer, we should see price pressures change within food and they should decline. So it appears likely that Governor Bailey has actually called the top in UK inflation. For instance, markets expect UK inflation to decline from 10.1% to 8.5% this month when the official numbers are published next week. So Governor Bailey appears to have called the top in inflation markets, but please join us again tomorrow where we'll update you on equity and bond markets. Thank you.